Hi guys, how's it going? So it's now May the 22nd. It's about 6:42 p.m. Central Standard Time, and this will most likely be my final update until a little bit later in the week, most likely Sunday. If you guys are not following me on Twitter, I highly recommend you follow me on Twitter because it's where the majority of the information is conveyed. So guys, I am on fire this month, as you guys know. I'm pretty damn accurate. My win rate's well over 90% this month. Not only that, my calls on Twitter have been like, whoo, fire, guys. That's not even to toot my own horn. That's me keeping statistics of myself, right? So if you guys have been following me for a while, you'll know that I have been trying to let everybody know that this $7,500 range, just as an example, I tweeted this 12 hours ago, right? That we would fall between 75 to 7,600. Now, why and how have I been able to predict this, okay? Now let's look at it together here and talk about what has been going on in the grand scheme of things. And we'll try to be as diligent as we possibly can. Now, as a day trader, our job is to try to capitalize on short-term gains for the day where there's heavy volatility by taking advantage of these small swings intraday. So the goal of a day trader is to basically think to ourselves, all right, well, the market might move 5% up, but it might move, 3% up, 3% down, 2% up, 2% down, 4% up, for example, right? So we try to capitalize on as much of these percentage gains as we possibly can. So if you look on the 4-hour chart, the 4-hour chart is the one where I am most certainly drawing my resistance, okay? So take a look at this. This is where I'm drawing my resistance at 81.80. That is the one that I'm calling the major resistance, okay? 81.80. Why? Because on the 4-hour chart, that is pretty much exactly where we start to see the wicks start to poke up. See the wicks right there? So then the lower range, in my opinion, right, is right here, about 80.60-ish, maybe 80.50. So between 80.50 and also 81.88, or sorry, 81.80, that's a pretty strong resistance point. Now, we were starting to see a lot of downwards momentum, okay? So let's start off with right here, this crossover that couldn't get a higher high on the histogram, and it started to downtrend severely. You guys know where the point was to short? Right here, okay? This is the signal to have shorted, right around there. Why? Because this is also the same point where the MACD started to get to the negative side. Or actually, you could have even done it earlier, okay? You could have even done it anticipating right there. A little bit earlier as well, okay? See this? Even though the price is sideways, the RSI is getting lower lows and lower highs, right? So because of that, combined with the MACD, we can easily assume that there's going to be a downtrend. And that's why a lot of short positions started rallying up there. So why was this a prominent support zone? This was a prominent support zone because if you take a look at it on the 4-hour and then you draw this support right there going upwards, well, this certainly looks like it's making some sort of triangle with very relevant supports and resistances that are established. So I also did this right here. I took this right here, right? This structure right here, if that wasn't clear, all right? I took that structure right there, and then I said to myself, all right, well, we're most likely, actually, I did a little bit higher. We're most likely going to get a 618 Fibonacci range. And surely enough, we bounced right off of there. My buys were at 75.50 or so, so I got in a pretty darn good price. I think 2 Bitcoin. I got my phone all locked up and stuff right now, so I don't want to go get my 2FA to log in. But yeah, I'm expecting a bounce off of this particular region, and I would assume that we're probably going to trend somewhere in here. It's very likely because it's 618 region with a lot of confluent reasons for why we could possibly bounce to the upside. And then I think that we're going to end up making something like that. So for myself, when it comes to risk to reward, I'm extremely happy with it right here. 51.50, a break to the lower side with about a 2% stop, and targeting, first of all, right here first, okay? Around 80.50 is my first target, where I will absolutely take about 50% of my profit, wait for a downtrend, okay? Let's say we end up doing something like that. I'll wait for a little downtrend, and bam, right here on the Fibonacci range, I'll add more to it, and then when it breaks to the upside, if it does, I will buy on strength right around this particular region right here, okay? So that's what I would love to do in my opinion. I don't know if it's gonna happen. There's no guarantees in trading, right? But very likely. If you look at, for example, the 6 hour, that's kind of a really good support right now, even the 5 hour, okay? Because every time we get to the 5 hour, there, oh sorry, you didn't see that, there, right? Here as well, the 5 hour, and now another 5 hour. So I would anticipate for the yellow 55 moving average, just kind of do something like that in here, where we're gonna get activity, most likely within this region right here. And then we'll either break to the downside or we'll break to the upside. So with whatever works, amazing risks or reward setups, never be a perma bull or a perma bear. Because if you are a perma bull or a perma bear, what ends up happening is you're not sure how to cover your butt if the trend goes against you, right? So guys, excuse me guys, I'm a little bit under the weather still right now, and it's so crappy the weather here right now. We might even get snow like later this week, which is just brutal. So anyways, looking really good thus far. Now, if you guys are in this long already from 75, there's absolutely no reason for you guys to even do anything else. But let's, except for target somewhere up there. But let's say we end up dropping below it, no problem at all. I will close my long position, allocate about a 2% stop, and then I'll just target the interim swing low right over here, okay? This is most likely where it is, I'm guessing. That's on the lower end, about 69.89, but realistically, you'll probably get to about 71.50. So you just take the average of these two places right there. So that's both the bullish and the bearish scenario. But once again, my personal opinion is that we just end up trending in here. So anyways, I wanted to give you guys just a very quick update for the amount of time that I have. You guys have my thoughts for both bearish and bullish views. I've been doing very well this month in terms of consistency with updates and also accuracy, most importantly as well. And how do I know I'm fairly accurate this month? Because you guys are making a crap ton of money. And that's how I know. So anyways, have yourselves a great next few days. I will try to update you as much as I possibly can. And guys, don't forget, my course number 3 is out. Look in the description below. It's 15 bucks. That's it. Course number 3, or you can see it on my pinned Twitter. It's a live trading series with a documentation and review process. It analyzes every trade, good and bad, and we talk about how to improve the strengths that we have and also develop some of the weaknesses that we have as well. But the overall goal is to come up with a system that can actually help you improve your trading, where you can document and review so you can analyze your strengths and your weaknesses. Because how do you grow if you don't know what to improve on, right? So simple as that. Anyways, have yourselves a great day, baby whales, and I'll see you later. Take care now. Bye.